I think for my case for Bitcoin, in my opinion, it's the best money in human history. It's for very fundamental purposes of the properties that we want in a money. For one, it's the scarcest money in human history. It's the only monetary asset of all time that has a fixed supply. It's the most portable asset of all time. It's the only monetary asset that you can teleport over a communications channel like the internet. It's the most divisible asset of all time. It can measure an asset that's the size of a grain of sand. It can also measure assets the size of sports franchises. It is infinitely divisible because it is bytes of data. It's durable, it's portable, it's actually censorship resistant to governments and central parties, which gold, unfortunately, is not.
Gold and Bitcoin, both considered valuable assets, are often compared in the debate over which is the superior store of value. Gold, a time-tested physical asset, has maintained its status as a safe haven investment for centuries. On the other hand, Bitcoin, the leading digital cryptocurrency, is seen as the modern alternative, offering decentralized, borderless transactions. This debate came to life during a recent podcast hosted by David, where Jack Mallers and Peter Schiff discussed the merits of gold versus Bitcoin. Jack Mallers discussed Bitcoin historical performance and advantages over traditional investments, highlighting its decentralization and growing popularity. While Peter Schiff replied that gold outperforms Bitcoin, citing its fundamental worth and institutional demand, while questioning Bitcoin's legitimacy as money due to its lack of inherent value. Jack Mallers emphasized Bitcoin's scarcity, mobility, and censorship resistance, which make it a compelling alternative to traditional money. Mallers also discussed the limitations of gold, such as its reliance on centralization and inability to establish transaction finality without institutional involvement. He also stressed other advantages of Bitcoin in the podcast. Watch clips from the interview for further insights into Jack Mallers' argument for Bitcoin. Please like this video, subscribe to the channel, and turn on post notifications for more content. Enjoy the video.
I think anyone in debt traditionally has two options. You can either pay it back or default. The catch-22 with the US government and anyone that issues their own nation state currency is they can print and debase the thing that they owe. And so we know mathematically the government can't afford its debt. And we know that the United States defaulting as the world reserve currency is not an option. And so they have to debase the currency. It's their only way out is through. They have to print. And the financial markets are saying as much, in my opinion. Interest rates have gone up. Gold is up. Bitcoin's up. Stock market's up. When interest rates were zero and we were living through COVID inflationary times, Bitcoin up, stock market up, gold up. So I think we're past the point where I honestly don't even think Jerome Powell matters as much. I think he maybe did up until, COVID, but right now it's Janet Yellen. I think we're living in some early form of fiscal dominance, and clearly there's dollar liquidity. Even though we've had the fastest rate hike ever, they've tripped up banks. You've seen gold, Bitcoin, and U.S. stock markets all make highs within the last few years. And so to me, Bitcoin has been the most performant asset since it's been invented in human history. If you don't want to take the early number bias, over the last decade, Bitcoin has an average annual return of around 60%. Gold has an inflation adjusted return of annually around 2% over that same duration. So I think Bitcoin is better money. I think monies compete over monetary policy, and I expect Bitcoin to continue to do what it's already done. The real problem with gold is that, unfortunately, it has to centralize. The problem is that gold can't achieve transaction finality without the help of a government or a central party, meaning that when gold was operating in a local economy and you can exchange the physical coins with your direct counterpart for your butcher, your local tailor, your grocer, whoever you were exchanging with, gold was great. When the world needed to scale an economy and the velocity of money larger than your local economy, gold failed us. Gold failed us because gold is just a bare physical metal. It does not carry a monetary network. What's the gold network? The gold network are human beings. And when you're trying to transact in an economy of billions of people globally, you are reliant on central parties, banks, governments. And it was for that reason that gold failed. And it failed in a way that you can't operate a truly free market when the concentrated supply is with those that you have to trust. And so that's fundamentally what Bitcoin solved.
According to Peter Schiff, the historical link between gold prices and gold ETF assets under management weakened in 2022, with gold prices climbing despite unprecedented outflows. He ascribed this to institutional buyers, primarily foreign central banks, purchasing gold from retail investors. He also pointed out that gold has outpaced Bitcoin regarding price appreciation and market capitalization growth, with Bitcoin failing to reach a new gold high since 2021. Peter Schiff questioned Bitcoin's legitimacy as money, citing its lack of inherent value and limited use beyond speculation. He pointed out that money must have intrinsic worth, which Bitcoin lacks. In contrast, he stated that gold may operate as a better kind of money, especially with tokenization and blockchain technology, allowing faster and more efficient transactions. Let's go back to the interview and watch more clips to gain insights from Peter Schiff.
First of all, historically, at least going back to the formation of the gold ETFs, the price of gold and the assets under management of the gold ETFs have gone in a positive correlation with one another. As the price of gold goes up, more people want to buy. And so there's more money that's coming into these ETFs. And the converse, when gold starts to pull back, people get nervous and they sell. And so as the price of gold goes down, there's net liquidations out of the gold ETFs. Well, that all broke down, started kind of in 2022, but really kicked into gear in late 2023, where we saw an almost parabolic, rise in gold. Gold went up 25% in a short period of time. But during the same period of time, we saw record outflows from the gold ETFs. And I think not a coincidence, they really started to pick up in January of this year when all the Bitcoin ETFs launched. And I thought that maybe there were a lot of people, ETF investors, who were making the switch. They were selling gold ETFs and buying the Bitcoin ETFs. But I thought that was a great contrarian indicator, because when retail is selling, it's generally a bullish indicator. But the question is, if you had all these retail investors selling their gold, why'd the price go up so much? Somebody was buying, and it was the institutions, mainly foreign central banks, that were buying the gold that retail investors were selling. And interestingly enough, I tweeted out today, since those ETFs came public about the second week of January, since the opening trade, they're up about 16.5%, but gold's up 24% during the same time period. And if you actually look, even though Bitcoin made a new nominal record high this year in dollars, it never made a new high in gold. The high for Bitcoin priced in gold was still back in 2021, and we're more than 30% below that high now, about 3 years later. So I think the tide has already turned, where Bitcoin is going to continuously lose value measured in the price of gold. And especially when you look at the market cap, because gold has added a tremendous amount of market cap this year, given how much larger the market cap already was. So it's going to be very elusive. I hear a lot of people, Bitcoiners think that it's going to overtake gold's market cap, when it's actually been falling further and further behind in market cap related to gold over these past 3 years. Despite all the hype, all the ETFs, MicroStrategy with Michael Saylor, El Salvador ETFs, all this stuff, Super Bowl ads, massive conferences, they still can't get Bitcoin to make a new high. But also, you can't ignore all of the hype that's occurred in the past 3 years that should have driven Bitcoin much higher. In fact, if you go and look at what all the Bitcoin bulls were saying a year ago, 6 months ago, 2 years ago, about where Bitcoin would be, nobody thought it would be this low. Everybody was talking about crazy numbers. And so it's been very disappointing from that respect. Now, getting back to your idea that Bitcoin is the greatest money that's ever been invented, I don't think it qualifies as money at all, because money has to be the most marketable commodity. And the commodity has to have value unto itself, and Bitcoin has none. Bitcoin is used to exchange, and you could speculate on it, you can buy it, and maybe somebody else will pay a higher price. But apart from that, it's not used for anything the way money is supposed to be, like gold is. But I'm surprised that you don't recognize this, Jack, but with the internet and with blockchain or without blockchain, gold can actually function as much better money than it ever has in the past. And it did a pretty good job for hundreds or thousands of years, because you could take gold, you could tokenize it, and now I could divide it infinitely into tiny little specks. I can send it across the world as quickly. In fact, I can send it faster than I can send Bitcoin. I can send it for less money than I can send Bitcoin. So we could use gold as the basis of a digital monetary system that is much better than when gold was the basis of a paper monetary system.
In related developments, Bitcoin dealers are bullish on the asset's value, believing it is grossly undervalued given its current price. This feeling comes ahead of a hectic week, which includes a presidential debate and the release of vital economic figures. Bitcoin traded smoothly over the weekend, with minor price changes and low trading volumes. Other important cryptocurrencies, such as Ether and Solana, experienced little change. According to Presto research analysts, Bitcoin's undervaluation comes from ignored fundamentals, specifically network security. They emphasize that the hash rate, which measures the processing power used to secure the network, has reached an all-time high of exahash per second. This indicates a secure network with the possibility for ongoing growth. Bitcoin miners have increased capacity since August, coinciding with all-time highs in hash rate, which usually signal price bottoms. Traders are also studying recent US payroll data, which indicates a weaker labor market and fewer recession risks. Since Friday's report, lower than expected payroll data has dominated market sentiment, forcing broad assets to fall. The forthcoming release of Consumer Price Index, CPI, and Producer Pricing Index, PPI numbers may impact Bitcoin's price. Furthermore, the presidential debate between Donald Trump and Kamala Harris may impact the cryptocurrency market since both candidates have declared a desire to expand the business. Trump wants to make the United States the crypto capital of the world, while Harris's advisors are looking into policies to help the business develop. The cryptocurrency market is projected to be highly volatile in the run-up to the next Federal Reserve meeting, with traders constantly monitoring economic data and political developments for potential price moves. As we conclude, what are your thoughts on this interview? Who do you think presented a stronger argument in the debate, Jack Mallers for Bitcoin or Peter Schiff for gold? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.